Today, the stock of the day is Xero. Now, I know that it was yesterday that we did get the news out, but we did not have time, or we didn't pick it as the stock of the day yesterday. And the thing is, it's just such a big overarching story. I did want to get a view from my guests, and keeping in mind that folks have gone in and bought the dip on Xero today. It recently smashed its FY25 guidance with 31% revenue growth to $2.8 billion, pointing to accelerating US momentum on its Melio integration and new AI partnerships with Anthropic. Earnings were up 18%. Xero added more than 500,000 net customers and generated free cash flow of 554 million Kiwi dollars. Sukhinder Singh Cassidy, the CEO, says there's been strong execution across its 3x3 strategy. And following yesterday's share price dip, shares are up by 8.5%, but you can see on your screen still a long way to go to the glory days back around that $200 mark. Now, of course, guys, it's been caught up in the SaaS apocalypse. How will AI disrupt? Will Xero fall victim? But I was listening to Jeffrey Schultz from ClearBridge Investments. I mean, not all software companies are going to be disrupted by AI. So is this the baby out with the bathwater for Xero, you think?
I have to say it from Hero to Xero.
Yeah.
Look, it could be. This company has a very strong moat. They have a very sticky customer base. They have a good product that's not too expensive. There is competition, but they have been growing and they did produce some results. I think what spooked the market was Anthropic launching a Claude for small business. So the talk yesterday was, is AI going to provide a product to the small to medium enterprise where they can do their own accounting and bypass what Xero is doing? So not so much attacking their current customer base perhaps, but more going forward. If you're a new customer, do you need to buy a Xero product or a competitor versus Claude or one of the other AI products? Which then begs the question, if you're using a chatbot or an AI product to do your accounts, what do the auditors do? Are they expected to check that? Is it a qualified audit report? So it all becomes very confusing. Most people will tell you there's no doubt that's where the future's going, and I think Xero actually also announced a partnership with Claude, so they're actually using it as well. And even stuff we're doing at Shore, we're looking to use AI to help us out with what we do, and not just necessarily one product, best of breed if we can, rather than default use Microsoft Copilot because it's safer, etc. What that has caused investors to do is Xero on the same growth trajectory that it was yesterday, 2 days ago? The answer is probably no. Are they going to lose a whole bunch of customers because of this? The answer is also probably no. So it's probably not analysts will tell you, analysts like to look backwards and project forwards and say, well, versus its history, it's cheap. Yes, so what? Is the history still relevant? Analysts will tell you it's a screaming buy because there's a 65% plus expected return despite the 71 times PE. I would sit and wait. I wouldn't rush out and sell it because it is a good business. I think this will evolve more slowly than the share price reaction has suggested, but it will evolve. If you owned it, I would sit it, put it in the bottom drawer, wait and see what happens. I wouldn't chase it until we get more data. If you didn't own it because it's not particularly cheap. So I'll call it a hold, a wait and see. Great business, probably not going to, the share price probably has overreacted, but it's too early to call it a buy.
Yeah, so fresh money, would you be putting it in now, or to Philip's point, would you wait because perhaps the bad news isn't priced in and it's not as if it's super cheap?
It's very interesting because I want to go back to the argument in terms of the blanket, it's an AI SaaS company, how it works. But if you really think about what Xero actually does, right, it's the accountants that use it, and in terms of using language models, the accuracy is really what we're looking at. I'm not saying that over the next couple of years, Claude is not going to improve and the language models aren't going to get better, but it's really, you're reporting tax. If you get it wrong, it's the wrong information. So that accuracy is actually a very important point. But also I think, as with most SaaS companies, right, like if you wanted to rewrite Xero with Claude, you can do it, right? Like I'm not saying from a technical standpoint it's hard, but I think it's the subscriber base and the user base that's really what the value of the company is. So, in my opinion, it's, I think it's a little bit overreaction in terms of what the price has done. In terms of future growth, I think there can be an argument where, are there going to be competitive products? I still think it has to be fairly specialized, even if there was competitors to come up, because they have to ensure the accuracy from a tax reporting standpoint, and the accountants have to pick that software up. But yeah, I still think, going at it today, I think it's a valuable company. It's got a huge subscriber base. Its revenue has been pretty good. So I have a bit more tendency to hold, and they've done well in the US as well in terms of that acquisition with Milo. So it's okay.
Okay,
Yeah.
hold for both of my guests for the stock of the day. One of the big stories of the week being Xero.